The last Bitcoin episode, Bitcoin was able to run up all the way to about $67,000, but now Bitcoin is trapped between massive support and resistance, with a possible head and shoulder pointing back towards 60,000, while a double bottom could still send us above 70K. In this episode, I'm breaking down every time frame to show you the exact levels that could trigger Bitcoin's next major move. And before we go over the top-down analysis, I want to go over this winning trade I gave you last time, which was on the 1 hour time frame. I gave you guys this flag with the entry at around 65,150, with the measure move taking us all the way to about 66,550. Not only did we hit that, but we pretty much made it all the way to 67K. So congratulations on whoever took this trade. This is a big win for the Flex Candle community. Now let's start off here with the monthly chart. Right now the price of Bitcoin is at 63,762, and for the month of July we're looking pretty bullish compared to last month. We were able to bounce off of the 50 moving average at 59,917, and the stochastics are low here. This looks like it could roll over though if we cannot stay above this 50 moving average. The RSI is below the 50, but we're kind of pointing up. Now what we got going for us is that maybe we won't break the 50 moving average just yet, because we're very far away from the 21 moving average at 89,396. But this also means that we could start bear flagging here sideways until this 21 moving average catches up to price, and then eventually we could roll over. So let's see how July ends up closing. We definitely need to stay above this 50 moving average to try to stay a little bit neutral to bullish. We head over to the weekly time frame. We ended up closing a green candle for this past week, and we were able to still stay above the 200 moving average at 63,554. Currently we have a red candle here, but we still have 5 days and 6 hours before the candle closes. Now the stochastics look to push up, but I'm starting to see a little curvature down here. The RSI kind of looks like we're rolling over as well. Ultimately we need to stay above this 200 moving average. If we cannot, I do have this in a bear flag that could break us down to about 47K, and right now we're still within that bear flag. Now the 21 moving average is getting closer to price. If the 21 moving average touches price and we cannot get above the 21 moving average, then I do see that bear flag playing out. Now if we could get above this 21 moving average, notice how there's a gap here in the VRVP. We could make it back up even to about 75K, and maybe this could turn into a double bottom here, and maybe this is the bottoming pattern that we need to get out of this bear market. But right now it is looking like it's favoring that bear flag to 47K. Now if we go over the other time frames really quickly, on the 6-day chart the stochastics are low. They kind of look like they want to roll over. 5-day chart looks pretty similar as well. Now the 4-day chart does look toppy here, so if we start to roll over, it kind of looks like on the 5-day, the 6th, and even the week, the stochastics could roll over as well. The 3-day chart, the stochastics are toppy. We're below the 50 on the RSI. We could see that we're getting rejected off of this 21 moving average, so it's looking like this bear flag could be in play. Now on the daily chart, there's two patterns here right now. The stochastics are on the way down, so we still need a little bit more before we could reset. We started losing the 50 on the RSI. Now ultimately I have this in a inverted head and shoulder pattern with the left shoulder, head, right shoulder, taking us to about the 200 moving average at around 73K. But right now I'm also seeing a possible head and shoulder pattern, left shoulder, head, right shoulder, that could bring us down possibly to 60K. I'll show you this a little bit better in the lower time frame so we can see it more clearly. But right now we're getting rejected off of the 21 moving average, and we just bounced off of the 50 moving average, but we're stuck in between. If we lose this 50 moving average, this will trigger this head and shoulder pattern to the downside. In the 12-hour chart here, you can see the head and shoulder pattern more prevalent. Let me see if I could draw it here for you guys. You can see here the left shoulder, the head, and then the right shoulder, and I do believe that this takes us to about 60K or so. This will trigger the bear flag that takes us to 47K, and maybe this is what gives us the rest of the measured move for that bear flag. Now ultimately, to negate that, we have to get back above this 21 moving average. If we do, then maybe we could get to this 200 moving average at 69K, and that will trigger the inverted head and shoulder I was talking about on the daily chart. The 8-hour time frame is looking bearish. Again, left shoulder, head, right shoulder. This is looking bad because we got to the 200 moving average and we couldn't get above it. We lost the 21, bounced back up, and again lost the 200 and the 21 moving average, and now we're going sideways here, kind of bear flagging out. Now the stochastics here are low. We could definitely drag here for a while before we come up, but this is the only thing we got going for us, is that maybe we can start making a move back up, but ultimately we have to get back above 65K in order to try to get a little bit more bullish here. The 4-hour chart, stochastics are low. We got some bullish divergence, and we were able to bounce off of the 200 moving average, which is really bullish here. I'm really liking this green candle with this giant wick here, but we have to get back above this 50 moving average, which is at 65K. If we get rejected off of this 21 moving average, we're going to come back and test this 200 moving average, and if if we lose this 200 moving average again, I think we'll probably go for more downside towards 60K. On the 1 hour time frame, stochastics are toppy. It looks like we're rolling over. We are above the 21 moving average. Now, what I'm hoping is that maybe this could be some type of a falling wedge and we stay above the 21 moving average. This could also be some type of a cup and handle play as well, kind of like double bottomed here. Now, if this is a cup and handle or even just a falling wedge, either or will give us the move back up. We could possibly make it back up to about 64,741. It's about $1,000 move, but we'll be closer to this 200 moving average, which is at 65K. And ultimately, we have to get back above 65K to try to make that run towards 70K. We cannot break 65K, then I see us coming back down to 60K. On the 15-minute chart, stochastics are low. We could drag here. We are above the 21 moving average. If I put on the patterns, you can see here we're kind of tracing the falling wedge. So right now, overall, I'm a little bit bearish on Bitcoin. It does look like we want to get to 60K again and test that. The only thing that would make me bullish is if we could break above 65K. If we could break above 65K and hold it, then I could see us moving towards 67, 68, and 70K or beyond. So 65K is really going to be the line in the sand. Can we get above it or do we stay below it? If we do, more downside. All right, guys. So that's the breakdown. If this gave you clarity or a setup to watch, do me a favor, like, drop a comment, subscribe. And if you have a stock or crypto you want me to go over, drop it in the comment section. This is Flex Candle, where we read the candles and flex the moves. Catch you on the next chart.